What's our number one business expense? As a small business owner, what is the largest expense you incur? Now, a lot of people are going to say, oh, it's labor, oh, it's cost of goods, and all these other wonderful excuses. But here's what the number one business expense that we incur is: taxes. It's estimated that the amount that we pay in taxes is 42 cents on every dollar that we earn goes out in the form of taxes. That means the amount we pay in taxes on average is greater than the amount we spend on housing, food, clothing combined. Now, as a direct result of this, the average amount of retirement savings for Americans is a little bit less than $50,000. So if you don't have enough money to retire, what's going to happen to you? You're going to keep on working. You're not going to have a retirement. Now, what's an easy way to dramatically lower the amount you have to pay in taxes, cut that biggest expense you have, and yet at the same time help you build up your retirement? It's a personal 401k, And 401ks are absolutely fantastic animals. Number one, they can generate tens of thousands of dollars in tax deductions for you. Potentially, if you were married, husband and wife, they could put away over $80,000 a year within a retirement plan. And then whenever you put that money inside of that 401k plan, now that money is going to be building up in a tax-free environment. If we now use something called the Roth 401k that we're going to be talking about in just a little bit, that money is going to be building up in a completely and totally tax-free environment. And final big benefit of these 401k plans, asset protection. Now, if you get involved in a lawsuit, if it comes down to bankruptcy, the worst case scenario, even though we don't want to think about it, the bankruptcy code says assets you have inside your 401k plan are protected. Chances are most state laws say assets you have inside your retirement plan are exempt from the claims of creditors. So that's the beauty of these personal 401k plans. They can generate very large tax deductions for you. They allow the money to grow in a tax-free environment. And also, now that you're building up this fantastic amount of money, it's protected from the claims of creditors. Now, I know what a lot of you are thinking. A lot of you are thinking, well, gosh, this 401k plan, that's really large, that's hard to operate, only large corporations have that. Absolutely not true. Absolutely not true. Due to recent changes in the tax code that came about in 2002, there is no better tax planning vehicle out there other than the personal 401k. Now let's talk about contribution limits with a 401k. Under these fantastic changes that came about in 2002, you're allowed to put the lesser of 100% of your salary, and you heard me right there, 100% of your salary can go inside a 401k plan up to a maximum of $15,500 if you're under 50 years old, or $20,500 if you're over 50 years old. Also, your company, your business, your own personal business is allowed to put in 25% of your salary for a total contribution of $44,500. Oh, and that's just tax deductions. In some situations, you can actually receive tax credits, and a credit is a dollar-for-dollar reduction in the amount you have to pay for taxes, just for setting up a 401k plan. Let's give an example. Let's say that Frank works during the day at IBM. At nighttime, he has a small home-based business, and he generates, $12,000 a year from that home-based business. Under the personal 401k plan rules, Frank is allowed to contribute every single dime of profit that his business creates into his 401k plan. Because it's under $15,500, he is allowed to put away 100% of his earnings into the 401k plan. He has just wiped income taxes out on the profits generated by his business, and yet at the same time, it's inside his personal retirement plan, building up and accumulating for his retirement, for his future benefit, and building up and accumulating in a tax-free environment. How cool is this? It just doesn't get any better than this. Now, some people say, well, gosh, I can't afford to make these contributions in the 401k. Something might come up. I might need to access that money. I'd rather have it off in savings where I can gain access to the money. Here's another fantastic benefit of these personal 401k plans. You are actually allowed to borrow money out of your personal 401k plan. You're allowed to borrow out the lesser of 50% of your account balance inside the 401k plan, or $50,000. So if you have $100,000 inside the 401k plan and you need some cash for something, guess what? You can borrow out up to $50,000 from the 401k plan. Now, you're going to have to pay it back, and it's going to have to be paid back probably in a 5-year time period with interest. But who are you paying that interest back to? You're paying it back to your own retirement plan. And let's go a little bit further with this. These personal 401k plans, these are not your father's 401k plans. These are self-directed. And what do I mean by self-directed? I mean, number one, if you want to, you can use the 401k plans to invest in the stock market and invest in mutual funds. Alternatively, if you want to, you can use those assets to go out and directly purchase real estate. You can go out and make loans secured by real estate. You can invest in private businesses. There's a whole world of opportunity of what you can invest these 401k assets in, and you are in control. Literally, you are going to have a checkbook that directs how you're going to invest these 401k assets. You don't have to be stuck investing in stocks, bonds, mutual funds. You've got the whole gamut of investments out there that you can use your 401k plan to invest in. And here's another really fantastic feature of these personal 401ks. As of January 1, 2006, there's a new section of the tax code that says you can create something called a designated Roth account within that 401k plan. Now, what that means is, as you put money inside the 401k plan, you don't get a tax deduction whenever you put the money into the Roth side of the 401k plan. As you put that money in there, it goes inside the 401k plan. Now you go out, you make an investment in the designated Roth account of the 401k plan, and as that investment pays off, every single dime is growing completely and totally tax-free. So long as you wait 5 years and you're over 59 and a half whenever you start taking that money out, that money is going to come out completely and totally tax-free. Other super big benefit here. A lot of individuals, they would love to set up Roth accounts, Roth IRAs, if you will. But the tax code says once you make over $160,000 in change, you are not eligible to establish a Roth IRA account. With a Roth 401k, there are absolutely no income limitations. You can make $160 million a year, and you can still make contributions into the designated Roth account of your 401k plan. And let's just walk a quick example through here. Frank goes out and buys some real estate for no money down inside of his Roth 401k. And why do I have in here that he buys that real estate for no money down? First off, a lot of people say, well, gosh, Tim, there's not much I can do with a $10,000, $15,000 contribution into my Roth 401k plan. And I say, au contraire, there's a lot of stuff you can do on a leveraged nature. Also, I emphasize the no money down because with an IRA account, if my IRA borrows money and it makes a profit from that borrowed money, that is something called debt-financed income. And even though my IRA is a tax-exempt entity, it has to pay taxes on the profits generated by borrowed money. So if my IRA goes out and borrows money to buy real estate and it makes a profit on that real estate, my IRA has to pay taxes on that profit generated. With the Roth 401k, what we're talking about here, the personal 401k, that 401k can be completely and totally leveraged. It can be leveraged to the hilt. And now you sell it and make $500,000. Chances are, so long as you wait the 5 years and you're over 59 and a half whenever you take that money out, you're not going to have to pay a single dime in taxes on the profits generated. Once again, you can do no money down transactions, leverage transactions on real estate. And now whenever you sell off that real estate or your Roth 401k sells off that real estate and makes a nice little profit, all that money is completely and totally tax-free for your 401k and is ultimately going to be tax-free whenever you start taking distributions out of the 401k plan. Asset protection. Where do I even begin with asset protection? We all know that in America, most people are playing the lawsuit lottery. We know that as soon as we build up a large amount of assets, we become nothing more than a bullseye, a target for people to file frivolous lawsuits and try to take away our assets. 401k. Your personal 401k is probably going to protect your assets from those lawsuits. And let me explain why. The worst case scenario of a lawsuit is that you have to file bankruptcy to get rid of that judgment. Under the bankruptcy code, 401k assets are exempt. They're not even a part of the bankruptcy estate. We go any further. Most states have laws that say 401k assets are exempt assets that predatory creditors can't take away from you. By building up assets inside the tax-free environment of the 401k, you're also building up a financial fortress of money that people are going to be hard-pressed to take away from you. So far, pretty exciting stuff, huh? About how you can build up all this money inside of your 401k plan, or better yet, that Roth 401k plan. Let's talk about another fantastic benefit of these personal 401ks. And that is this. If an individual retirement account commits something called a prohibited transaction, that is the death sentence for your IRA. Your IRA is considered completely and fully liquidated. Completely and fully liquidated and fully subject to taxes as well. With a personal 401k, if your personal 401k engages in one of these prohibited transactions, the IRS has a number of programs that you can get into where basically you probably will not owe any fines or penalties so long as you fix the problem and you don't do that problem again. So the 401k is a fantastic safety net as well. Whereas with an IRA, if you do something slightly wrong with an IRA, there is no leniency, there's no mercy. It's an immediate distribution of the IRA. With a 401k, if you accidentally do something wrong with a 401k, so long as you rectify the situation, fix it, repair it, and don't do it again, you're probably not going to be facing any fines or penalties. Okay, let's get into specifics. How do you set up the 401k plan? How do you fund the 401k plan? First off, you have to have a valid business to sponsor the 401k plan. Now, this can be as simple as something like a prepaid legal and Avon, etc., so forth, or it can be a highfalutin business with 100 employees. It just doesn't matter. It just has to be something that you are treating, running, and operating as a business, and you're continually seeking a profit with that business. So that's number one, is you have to have a business. Number two, what we can now do is start moving all the funds you have inside your IRA accounts, all the funds that you have over inside of your old 401k accounts. We can start moving those into this 401k plan, and no taxes are due whenever we make the transfer. In fact, under some situations, if you have an outstanding loan with your old employer, with your old employer's 401k plan, and you quit service of that old employer, we might be able to move over not just the assets of that 401k plan, but also that outstanding loan so you don't have a taxable event. So that's what we do, is we move all the assets of your other retirement plans and bring them together inside the 401k plan. If your spouse has assets from other retirement plans, and if your spouse is a member of your business and is involved in your business, we can bring over their assets, jointly pull them together, and start investing together. It's just fantastic. So number one, we need an active business to sponsor the plan, and then we can start making contributions and moving those funds into the retirement plan. So summing it up, with a personal 401k plan, you receive asset protection. Next, you're going to get tax deductions, and literally those tax deductions could save you tens of thousands of dollars a year in taxes. Next, you're able to borrow money from the 401k plan. If you run into a cash crunch, no big deal. You can borrow money out of the 401k plan. You're able to direct the investments yourself with the 401k plan. And whenever I say the investments, you're not limited to stocks, bonds, mutual funds. You can go out there and directly invest in hard money loans, tax lien certificates, real estate. You're not limited to just stocks and bonds and mutual funds. Safety from penalties. With the IRA, you do something wrong, you're wiped out. Your IRA is fully subject to taxes. With a 401k plan, you have the safety net. Also, what we do is we set up our 401k plans as Roth 401k plans, so each dime that your plan grows by, so long as you do things correctly and we have it inside that designated Roth account, you're never going to pay taxes as that 401k Roth portion grows and grows and grows. No taxes are going to be due on that whatsoever. And alongside with that, there's no income limitations. If you make over $160,000 a year, not a big deal. We can still set up this Roth 401k for you. Bottom line is, what are you waiting for? The benefits are too good to pass up. You need to get going on this right now.